What if the biggest wins in history weren't won with one giant move, but with dozens of tiny ones? Most investors are chasing the Hail Mary, but the quiet compounders? They're playing a completely different game. Super Bowl LI. 8 minutes left in Q3. The scoreboard read, Atlanta 28, New England 3. Win probability models gave the Patriots less than 0.2 chance of winning. Statistically, it was over. Expected play? Desperate gambles, Hail Marys, big swings, Hollywood-style heroics. But that's not what happened. What followed was a miracle, but it was also a grind, methodical, almost monotonous, small play after small play. Running back James White caught 14 passes, unglamorous, check down after check down, but brutally effective. It was like a tide slowly rising. Quiet at first, then impossible to stop. Investors, this raises a big question. What if the most reliable companies are built the same exact way? Not one big idea, not a Hail Mary product launch, just consistent, disciplined effort compounding over time. In Super Bowl LI, the Patriots ran 93 offensive plays. Atlanta ran just 46. Possession time told the real story. They controlled time of possession 40 minutes to 20. A siege, not a sprint. And the defense? They made small but critical plays too. Hightower forced a fumble deep in Atlanta's territory. A sack by Trey Flowers, a penalty, small plays that pushed Atlanta too far back for the field goal. Each small success built on the last, creating a cascade. That's the anatomy of a process-driven miracle. As investors, we often grow impatient with boring strategies. A 1-5% margin gain here, 2% churn reduction there. Instead, we chase high-variance, exciting story stocks. The moonshot is always more attractive than the grind. The unpopularity of patient, grinding corporate strategies leads to mispricing. Durable compounders go overlooked. But here's the thing. That human bias toward excitement, it creates a real opportunity on the other side. So the real question becomes, how do we identify management teams executing high-probability small-win playbooks? Great management teams break operations into controllable, repeatable micro-wins, and they compound over decades. One investor put it perfectly, prefer CEOs who hit lots of singles, instead of betting the farm on one home run. Small, consistent actions create a powerful compounding effect. Incremental gains build on each other, exponentially. This is where a key psychological concept enters the picture. It's called locus of control, and it changes everything. Internal locus, you believe your effort shapes outcomes. External locus, you think luck or fate decides everything. Leaders who build companies on small, steady wins, they almost always have a strong internal locus of control. To attempt a 28-3 comeback, a leader must believe their actions can alter what seems like an inevitable outcome. Just get one first down. That's the internal locus mindset. One micro goal at a time. Achievable. Clear. Each micro win delivers a neurological reward, building what researchers call psychological momentum. That momentum makes the next small goal feel more attainable, reinforcing the belief that effort truly matters. At the team level, at the corporate culture level, that's the compounding impact I'd be looking for as an investor. The clearest corporate example of this mindset? Danaher Corporation and its legendary Danaher business system. For decades, Danaher built a culture and system dedicated to Kaizen, the Japanese concept of continuous improvement. The payoff has been massive. 45+ years of stock returns showing what relentless operational improvement delivers. Continuous improvement culture embedded across an entire corporation, reshaping margins, growth rates, and competitive moats. Then there's Constellation Software, a completely different business model, but the same obsessive discipline. Constellation acquires hundreds of small, niche vertical market software businesses and patiently improves them over decades. CSU is radically decentralized, pushing internal locus of control down to hundreds of autonomous business units. Their capital allocation is famously disciplined. They only take high-probability shots, qual-proven VMS businesses. The result, a long-term return chart that looks remarkably similar to Danaher's. Decades of quiet compounding. Two different industries, two different business models, but the same underlying playbook. Relentless, repeatable micro-wins. It wasn't a 50-yard Hail Mary that sealed the most dramatic Super Bowl comeback in history. It was a 2-yard touchdown run by James White, the culmination of one more methodical, grinding drive. The process was the miracle. Small things, relentlessly and repeatedly. That was the real superpower. Many investors keep searching for the next Tesla, the next Elon Musk. Perhaps that's the wrong game entirely. To tilt the odds in your favor, focus on identifying companies with systems so disciplined they almost can't lose. Look for an operational machine, a culture, a system, a process, built so deeply it runs without depending on one person. A culture that ensures the future takes care of itself, one micro win at a time, compounding over decades. Clear, calm, disciplined. The best compounders don't chase headlines, they stack small edges into massive outcomes. Relentlessly stacked. That's not a boring strategy, that's the whole game.